All right, so today we're going to really dig into Realty Income.
Yeah.
And specifically whether or not it's a good investment for 2025.
Sounds good.
We've got a great article here from The Motley Fool to help guide our discussion today.
Right.
It was published just yesterday, December 25th, 2024.
Very recent.
And you know what I think what's so interesting is that we're not just looking at the stock price here,
Right.
but we're really trying to understand Realty Income's whole strategy, how they've been doing, and where they fit into this world of REITs.
Yeah, and that's a great point because
Yeah.
the REIT sector in general has been kind of a roller coaster. You know? But first, let's just talk about Realty Income itself.
Yeah, let's do it.
What makes it tick?
Okay, they call themselves the monthly dividend company.
Right.
It's like their superhero name almost.
Catchy.
I get that consistent dividends are attractive to investors, but what's the real story there? Is
Yeah.
it all marketing hype?
Well, I think it's actually more than just a slogan. It's really built into them being a real estate investment trust, or REIT.
Okay.
And they're required to distribute at least 90% of their taxable income to shareholders through dividends.
Wow.
So when Realty Income talks about monthly dividends, they're not just talking the talk.
Yeah.
They're legally obligated to walk the walk.
I see. So it's like it's in their DNA. It's not just a
It's in their DNA.
marketing ploy.
Exactly.
Okay. But there's tons of REITs out there. What makes Realty Income stand out from the pack? Is it that 5.9% dividend yield that they're boasting?
Yeah.
Compared to the S&P 500's measly 1.3%?
Right.
And that's going to be a big draw for income-focused investors, right?
It is definitely eye-catching,
Yeah.
but I think that's where we need to kind of dig deeper.
Okay.
Realty Income's historical performance is really impressive.
Okay.
They've had a compound annual return of 14.1% since 1994.
Wow. That is impressive.
So the question is, how did they achieve this, and is that sustainable?
Right. Because past performance is not a guarantee.
Of course not.
Yeah.
Of future returns.
Right.
And that actually brings me to another question I have, which is their portfolio is massive.
It is.
They're leasing to businesses in like 90 different industries.
Yeah, all over the place.
I mean, it's almost like they're trying to be in every single sector.
Yeah.
Is there a strategy to that, or are they just spreading themselves super thin?
I think it really comes down to diversification.
Okay.
By leasing to so many different industries, they're strategically mitigating their risk.
Oh, that makes sense.
So if one sector takes a hit,
Mm-hmm.
they have, 89 others to kind of balance things out.
Okay.
And so I think this broad reach, this contributes to their resilience and helps to explain those impressive returns we were just talking about.
Okay, that makes sense, spreading the risk across so many different industries.
Right.
But doesn't that also make it like a lot harder to manage?
Uh-huh.
But how do they even make sure that they're getting a good return on all these different properties?
That's a good question. So this is where those triple net leases really come into play.
So with this type of lease,
Yeah.
the tenant actually takes on the responsibility of paying property taxes, insurance, even billing maintenance.
Wow.
So it really shifts a lot of the operational burden
Mm-hmm.
and risk
Yeah.
away from Realty Income.
So it's less risk for Realty Income, but what's in it for the tenants then?
Right.
Why would they agree to take on these extra costs?
Well, there are some trade-offs.
Okay.
Triple net leases usually come with lower base rents,
Oh, okay.
which can be attractive to businesses.
Okay.
Plus, they have more control over the property and how those costs are managed.
I see.
So it really depends on the tenant's priorities and their financial situation.
So it's not a one-size-fits-all
Not at all.
kind of solution.
Right.
Okay, interesting. But getting back to Realty Income, they're really trying to build this fortress of stability, it seems.
It seems that way.
With this diversified portfolio.
Yeah.
And their triple net lease strategy. And on top of that, you mentioned that a big chunk of their portfolio is in these sectors that are kind of like recession-proof, like grocery stores, drugstores.
Right. The essentials.
Yeah, so everything seems to be pointing in a positive direction.
On the surface, yes.
Okay.
But there's a piece of the puzzle that doesn't quite fit.
Oh.
Realty Income's stock price is actually down about 34% from its pre-pandemic high.
Wait, what, 34%?
Yeah.
But we just went through all these positives. Their portfolio, the lease strategy, the consistent dividend payments.
Right.
How does that add up?
That is the million-dollar question.
Yeah.
This is where we need to kind of step back and look at the bigger picture.
Okay.
Realty Income isn't operating in a vacuum.
Uh-huh.
Their stock price dip isn't unique to them.
Right.
It's really a reflection of a broader trend impacting the entire REIT sector.
So it's not something specific to Realty Income.
Right.
It's a sector-wide issue.
Exactly.
Okay, and that makes their story even more intriguing then. So if their fundamentals are strong, but the market is down on the entire sector,
Yeah.
does that present a buying opportunity for investors?
Potentially.
All right, so we've laid the groundwork.
Yes, we have.
We've got this seemingly really strong company with an impressive history of returns,
Yeah.
but they're in a sector that's facing some headwinds.
Right.
This is where it gets really interesting for our listener.
I think so.
Is this a chance to get a great deal on a fundamentally strong company?
Possibly.
Or is there something that we're missing?
Let's find out.
Let's dig deeper into this article.
That's good.
And find out.
All right. Yeah, the Motley Fool analysts seem to think that Realty Income's underlying business is still solid.
Okay.
Their long-term performance is, pretty impressive.
Yeah.
But like you said, past performance isn't everything.
Right. So should investors be hitting the buy button based on their track record alone, or is that too simple?
Well, I think investing is never about guarantees. It's really about understanding the risks and making sure that your investments align with your own goals and, your risk tolerance.
Okay, so no rash decisions.
Exactly.
But how do we assess the risk here?
Right.
Like, where do we even start?
Well, I think we need to consider the bigger picture.
Okay.
The REIT sector as a whole is facing some challenges right now.
Okay, like what?
Interest rates are a big factor.
Mm-hmm.
Economic uncertainty is always kind of looming out there.
Yeah.
And then we can't ignore the shifts that are happening in commercial real estate itself.
Okay.
All of these things could impact how REITs perform in the coming years.
And those factors could drag down even a company as strong as Realty Income.
Exactly.
Okay.
So while their track record and their financials might look good on paper, there's no guarantee that the REIT sector is poised for a quick turnaround.
So this isn't like a slam dunk buy signal?
Not necessarily. There's definitely more to it than that.
Yeah. So what should our listener be thinking about as they consider Realty Income?
Right.
In light of this sector-wide slump?
Well, I think it's helpful to look at it through the lens of value investing.
Okay.
So is Realty Income currently undervalued by the market?
Okay.
If so, this dip could represent a chance to buy a high-quality asset at a discount.
Okay. I like that framework.
Yeah.
But it all depends on whether Realty Income is truly undervalued, right?
Right.
What are some signs that it might not be the bargain it appears to be?
Yeah, what are the red flags?
Yeah.
I think that's where we need to put on our detective hats.
Okay.
We need to really dig into Realty Income's financials.
Okay.
How much debt are they carrying?
Mm-hmm.
Are they acquiring new properties at reasonable prices?
Yeah.
Are their occupancy rates holding steady?
Those are great questions.
Yeah.
And speaking of comparisons, shouldn't we be looking at other REITs too?
Absolutely.
To see how Realty Income stacks up against the competition?
Yeah.
Maybe they're all in the same boat. Or maybe Realty Income is actually in a better position than most.
That's a great point. Comparing Realty Income to its peers can provide a lot of valuable context.
Okay.
Are other REITs with similar portfolios and track records also seeing stock price declines?
Yeah.
Or is Realty Income an outlier?
That's really important because we've been focusing so much on Realty Income.
Right.
But they don't operate in a vacuum.
They don't.
Understanding the whole REIT sector is super important for making an informed investment decision.
For sure.
So to our listener out there, don't just focus on the individual company. You got to zoom out and look at the whole landscape.
Exactly. And remember, information is power.
Yeah.
The more you know about Realty Income, about their competition, and the forces that are shaping the REIT sector, the better equipped you'll be to make, really smart investment choices.
Well said.
Thank you.
So where do we go from here?
Yeah.
What are our takeaways so far from this deep dive?
Right.
What should our listener be mulling over as they continue their research? So, okay, let's recap a little bit. Realty Income has this long history of steady dividend growth.
Right.
Super diverse portfolio, across 90 different industries.
Right.
They mainly focus on these essential properties that do well, even when the economy's not doing great. And plus, they've got those triple net leases that shift the risk away from them.
Yeah.
So all signs kind of point to a pretty solid company, right?
Yeah, on the surface, it does seem that way.
Okay.
But remember, we're looking at this through an investor's lens.
Yeah.
So I think the big question is, are those positive factors enough to outweigh the fact that the whole REIT sector is kind of,
Yeah, taking a hit.
Taking a hit right now.
Exactly.
Yeah.
And we've got that 34% stock price drop still looming large.
Right.
The Motley Fool article seems to think that Realty Income could be a buy.
Yeah.
But they're also careful to say that investors need to do their own homework.
Of course.
And consider their risk tolerance.
For sure. Nobody should be making investment decisions based on, what they hear on a podcast.
Right, exactly. We're just trying to give you the information in the different angles.
Yeah, be food for thought.
Yeah, exactly. And then ultimately, you got to,
make your own decision.
You got to make your own decisions.
Right.
Okay, so to our listener out there, we've presented a lot of information about Realty Income.
Mm-hmm.
They look good on paper, but they're also part of a sector that's facing some challenges.
Yeah.
So what are some of the key things you should be thinking about as you weigh this potential investment?
Well, I think the first thing is to really understand the risks facing the REIT sector in general.
Okay.
So interest rates, economic uncertainty, changes in the commercial real estate landscape.
Yeah.
These are all things that could impact any REIT, even one that's as well positioned as Realty Income.
And don't forget FFO, or funds from operations.
Yeah.
That's a really key metric for REITs.
For sure.
Basically, it's a REIT's version of earnings. And it gives you a much clearer picture of their cash flow.
Exactly.
So be sure to compare Realty Income's FFO to other REITs to see how they measure up.
That's a great point.
And also, while their past performance has been impressive, don't get too fixated on those numbers.
Right.
Past results don't guarantee future returns.
Of course not.
So do some digging, see how Realty Income has navigated past economic downturns.
Right. How have they weathered the storms?
Yeah, exactly.
Yeah.
Have they consistently outperformed their peers?
Yeah, that's a good question.
And of course, diversification is key.
Always.
Don't put all your eggs in one basket.
Right.
Even if that basket is a seemingly stable company, like Realty Income.
Yeah, spread that risk.
Yeah.
Here's a final thought I'll leave you with.
Okay.
I think it's helpful to think about Realty Income not just as a stock,
Okay.
but as a business.
Uh-huh.
Would you be comfortable owning a piece of this business,
Yeah.
even if the stock market took a nosedive?
That's a great way to frame it. It really takes the emotion out of it.
It does.
It makes you think about those underlying fundamentals.
Exactly.
Well, we've covered a lot of ground in this deep dive today.
Well,
We looked at Realty Income's strengths, explored some of the challenges facing the REIT sector, and hopefully we've given you a framework for evaluating this potential investment opportunity.
That's the goal.
So remember, knowledge is power.
Always.
We've equipped you with the information and the questions to ask.
Yeah.
Now it's up to you to do your own research.
Right.
And make a decision that aligns with your goals and risk tolerance.
Absolutely.
Thanks for joining us on this deep dive.
Appreciate it.
We'll catch you next time.
See ya.